You're continuing to watch our coverage here from Davos 2025, and now to talk to us about what the outlook is like for the banking sector back home is Amitabh Chaudhry of Axis Bank. Amitabh, many thanks for joining us here on CNBC-TV18. Pleasure to have you. Before I talk to you about India, what are you picking up on in terms of the big takeaways from the change of guard in the US and, of course, all the other mega trends that will shape 2025?
Well, I mean, obviously, US is a hot topic given all that is happening in the last 24 hours, so everyone seems to be talking about it.
Yes.
But over and above that, obviously, some of the obvious things about you, I heard you taking the previous interview, and I heard about the AI, and obviously people are talking about how AI could change the world. Climate risk is still very much a part of the agenda. All of us are suffering it and kind of seeing the impact of that on a regular basis. They are, I mean, also the headline for Davos this time is about collaborating in this
intelligent age.
Intelligent age. I don't know it is intelligent people collaborating in this new age. I don't know, but collaboration is becoming important because I think you're almost seeing a clear sign where unilateralism is what every nation is going for. It's every nation for themselves. So the collaboration needs to be more. People need to come together. We have a lot of conflict zones. They have a lot of global macros which are not necessarily talking about any form of collaboration whatsoever. And over and above that, with some of the things which Trump is talking about in terms of immigration and trade sanctions and whatever that might be, will have, at least in the short term, a pretty big impact globally. So, a lot of things to watch out for. And as I keep saying, we are in the risk business, so just looking at more risks out there.
Well, let's talk about the micros and let's focus specifically on what's happening with your business in India. 15-quarter low for you, both in terms of advances and deposits. What's hurting the business?
So, well, as I said, we are in the risk-taking business where RBI is very clearly giving an indication that we want you to manage a certain credit deposit ratio. At Axis Bank, we've also been very focused on ensuring that we get the right customers and right kind of deposits and do the right things for the long term. So, yes, I mean, we could easily demonstrate a slightly better growth.
So you're saying that this is slowing down consciously?
The deposit growth in the third quarter of this year was 1.4 lakh crores against 6 lakh crores on an average. To just show deposit growth, offer higher interest rates out there on the margin and just show a number is not the right thing to do. Secondly, we don't focus on the quarter end numbers. We focus on the average balances, and there our deposit growth was 13%. Our advances are linked to deposit growth. So the moment kind of deposit growth comes down, advances will come down. We are seeing incremental risks on the retail side, so we have to be cautious. At the same time, we continue to invest in our platform so that when the growth comes back or when the risks settle down, we will be back with the bank. We are very optimistic about what India presents. We keep telling people that please don't look at us on a quarter basis. Banking is not about a quarter. It is about building long-term relationships, signing up customers for the long term. So it will come back. I don't think we are worried about that. But yes, in the increment, if you have to manage the risk, it means that you have to take some hard calls. We'll take those hard calls.
So speaking of the hard calls, do you believe you've taken the hard calls, or will you perhaps need to take more hard calls, which will then reflect in the numbers in the near term?
So Axis Bank, we believe, has one of the most aggressive provisioning norms in the industry. So for us, on the unsecured side, which we provide for 100% within 90 days, that is not the norm followed by a lot of the banks, including some of the banks who are bigger than us. So in that sense, whatever is happening in our portfolio, we are recognizing and kind of provisioning it away very, very quickly. So yes, as things stabilize and as the stock continues to get better and better, you will see the growth come back. You will see, obviously, the elevated slippages come down. It's the next quarter, the quarter after that, well, only time will tell. But we are quite confident that with the kind of book we write, the kind of underwriting we do, the kind of customers we have, it should not be a long-term phenomenon. But yes, we also have to be cognizant of the fact that if the regulator continues to keep a tight leash on lending in general, there is a possibility that some of this slippages you're seeing on the unsecured side could flow on the secured side because they're all linked. And we have to be watchful of that. I mean, I don't think we should be just gung-ho for the sake of being gung-ho. We need to be watchful. And I think that's what we're trying to share to the market, that we are not going to lose any opportunity to grow, but at the same time, we have to be watchful of what risks could potentially emerge. And that's exactly what we're doing.
You just talked about the transference of unsecured to secured on the slippages side. Slippages have also been at a 13-quarter high for you, so it's not a 1 or 2 quarter phenomena. So do you anticipate things getting worse before they start to get better?
No, I think it's already stabilized. If you look at our numbers, the numbers are already stabilizing. See, we've gone through a period where the credit costs in India were at a historical low. And we talked about the fact that this will stabilize. So I think you're going through a cycle, a little bit of stability. You've also seen the Indian consumer over-leveraging themselves in some cases quite rapidly. So I think that also is getting normalized as we move forward. And obviously, there have been some macroeconomic or macro measures being taken by the RBI in terms of controlling some of this unbridled growth. So I think all these factors have played. It's a high after a certain period of time. We are still way below our long-term averages. We believe we'll be at the below our long-term averages, and quite confident about that because you know what we're underwriting.
But what about private capex, Amitabh? What's the sense that you get on that front at this point in time? You said you're bullish about the India story, but in the near term, what does it look like?
Well, till now it is basically the government which has been supporting
Yes.
the capex story, and the private capex is still quite slow. I think it still will take some time to come back. We are hopeful that the private capex should pick up because you are seeing some sectors of the economy where investments are seriously taking off, real estate being one example. I mean, manufacturing, we are seeing some investment, but it has been slow. And when you go and talk to the promoters, they are saying that I will be careful about where I invest. I'm not going to do just these large projects for the sake of doing it. I need to be careful. I need to be watchful. I don't want to over leverage. We have learned the lessons of the past. And so, and by the way, we also need to realize that the corporate profitability has gone up. So there's a lot of cash flow being generated by the companies, and they're obviously using that cash flow to invest rather than kind of borrowing from the system.
Yeah.
So private capex hopefully will pick up, but we've been talking about this story for at least last 12 to 18 months, and we keep saying the same thing every quarter. But this time, I think the tailwinds look slightly better. I think government also realizes that because they have kind of reached the capacity in terms of what they can invest. So if private capex does not pick up, I think it will start becoming a bit of a problem.
So 25, if I were to ask you for a headline, likely to be a better year for Axis Bank in terms of numbers as well as reclaiming market share?
Well, our numbers will keep moving up. Even this year, in spite of the elevated, let's say, credit costs, our profitability will be higher than that of last year. So it's not that, we are kind of going down somewhere. We are continuing to move up. The pace of movement up is slightly slower. I think it should pick up in 25, 26, but subject to some of these things stabilizing. I mean, we are aware of the fact that there is no liquidity in the system. The deposit, growth is slow. There are elevated levels of stresses. Rupee has depreciated. So there are some factors at play which could impact this growth going forward next year. I'm very hopeful that RBI is obviously looking at all these factors, and they've already started, everyday auctions on VRR.
Yes.
They know they need to inject liquidity into the system.
Yeah.
They know that the credit growth has come to a point where it started hurting the GDP growth to some extent. So I think they will take steps, and they will hopefully look at measures which will kind of revise some of this growth. And if that comes through, then yes, 25, 26.
So outlook on rates and the rupee, expecting a rate cut in February, and where do you believe the rupee is likely to be?
So my view is rate cut really going to spur the economic growth? I'm not so sure. I think what the system needs more is liquidity back in the system. One, secondly, deposit growth to pick up a little bit. We also need some of the macro, regulations which RBI has brought in or is talking about bringing in. RBI to kind of, sit back and think through as to how they want to implement it and when they want to implement it. For example, if they implement the LCR, kind of the draft guidelines as the way they exist, we are talking about 5 to 7 lakh crores being taken out of the system. So it will have an impact. So my view is that on the rate cut, they might do it to give a signal, but is it going to spur economic growth? I'm not so sure. As far as rupee is concerned, I think obviously a lot of money has been spent to defend the rupee, but there is a kind of a dollar play going on, and I don't think it's going to end in a hurry. So just keep spending the reserves to defend the rupee might not make sense. They've already kind of let go of it a little bit. And my view is that I think now the current dispensation, the government would be that let's just ensure that the depreciation does happen, but it's kind of a certain basis rather than just trying to hold the floor. It's not going to work.
And that is what Raghuram Rajan had to say when he spoke to me here this morning as well. Amitabh Chaudhry, it's an absolute pleasure. Many, many thanks for joining us here on CNBC-TV18. We wish you the very best for 2025. We are going to take a break here. There's a lot more coming up. We'll be joined by Sajjan Jindal right after this. Don't go anywhere. We're back in a moment with more. The conversations continue here at Davos 2025, and joining me now is Sajjan Jindal. Sir, thanks very much for joining us here on CNBC-TV18. Let me start by asking you about what you're picking up from the CEOs that you're talking to in terms of what the outlook for 2025 looks like. What's global demand likely to be?
I think we are having this Davos meet just when Trump is taking all the limelight.
I know, in the shadow of the Trump inauguration.
Inauguration, that's right. So I think there is a lot of question marks on what's going to happen to the US, what Trump is going to do, and that will really define how the whole world order will happen. Last time around, Trump had put in a lot of import duties, and for him, it's America first.
Yes.
So I think the concept of the WTO, GATT, is all thrown out of the window, and there's nothing like that. So I hope, and also the European Union is also looking the similar way, right? So therefore, I think it's time that we in India start to think accordingly.
Okay, well, you know, just on the US, since President Trump has promised to make America great again for the second time around,
right.
As well as once more make in America, you have a plant there in the US, so it might actually benefit you.
Yeah, but that's a very small capacity. There is a plant, and we had invested in that plant because looking at that US will have to block all the imports coming in from outside the US. And knowing that, so we invested in that plant. So for that particular plant, it's good news. But whether for the world it's a good news, I'm not sure.
No, absolutely. Of course, there is uncertainty on how those tariffs are going to work out. But speaking of tariffs, industry had asked the Indian government for protection by way of safeguard duties, anti-dumping duties. I believe that the work has started on the possibility of putting in safeguard duties. Have you heard back from the government?
We haven't yet, but there's a lot of work going on because it's not a simple process. They have to follow the due process, and that's going on. And we expect that over the next 10 to 15 days, we should hear something back from the government.
In the next 10 to 15 days?
Hopefully.
But, you know, in terms of demand at this point in time, because the outlook certainly seems to be that global growth will be stable, albeit uncertain, but stable at 3.3%. That's the IMF outlook.
Right.
What's global demand for steel looking like?
So, no, globally demand for steel is also quite okay. It's not bad, but Indian demand is very strong. And on the back of the investment by the government in the infrastructure sector and other areas, the demand for steel is strong in India. Which is good news. So we are growing at about 10-12% steel consumption in India. So that's going well, and except that today China is dumping either directly or indirectly through the FTA countries. That's the only concern that we have. Once that is taken care, the industry should be in good stead.
Well, speaking of China, let's talk about your electric mobility plans. And you showcased your car at Bharat Mobility a couple of days ago. So, you know, the possibility of you tying up with a global partner and possibly a Chinese partner at that, outside of course, the existing partnership with MG.
No, so I'm very bullish about the electric mobility and India, given that it's a large country with large demand for the cars. And our over-dependence on imported fuel, in my view, electric cars make a lot of sense for India. So therefore, wherever technology lies, we will tie up with them to bring the technology to India and then very quickly localize it for the Indian market. That's the basic philosophy that I'm working with, and I'm quite sure that we will achieve that kind of goal. We are already scouting around the world for the technology, and China plays a very important role in electric mobility because they have much more head start over the other parts of the world, because most of the other part of the world, like Japan or Germany, Europe, they have their focus was on hydrogen mobility. Whereas China went for electric with battery, and they have moved ahead, and battery has really come of age on technology. So therefore, that for the cars, this battery technology is pretty good, and so therefore we are working on that.
So how soon before we actually see an announcement coming in on this front?
Announcement, I'm not sure, but we are already working on that project, and hopefully over the next 18 months we will see a new product coming from the JSW saddle under the brand name of JSW.
Okay, so JSW will continue to be the brand that you will use as far as the electric vehicles are concerned as well?
Absolutely, yes.
Okay, and in 18 months we'll have the cars on the road?
Hopefully, yeah, that's what we are gunning for.
And you know, what are you looking at in terms of capacity at this point in time, and localization as well? I mean, when you talk about localization, what are you working with to start with?
So, so our idea is that when we make JSW car, it would be, to start with, 75 to 80% local. That's the key message that I have given to the team, that we have to localize it. And the rest of the 20% should be done in next 12 months.
Okay.
That's the whole idea. So we should be a 100% local car. We will bring the technology whatever it takes to buy the technology. We will buy it and then develop it, do the research and development within our company, and then make it a Make in India car.
Make in India car, hopefully in the next 18 months.
Yes.
2025, outside of electric mobility and the steel business, on the cement side, an IPO likely?
Yes, cement. I think we are working on the IPO. We have got the approvals to go ahead with the IPO. So hopefully in the next 6 months, we should see the IPO for cement. But beyond cement, the energy, renewable energy is a big one where we are investing very aggressively, because I believe a lot in renewable energy and battery storage. So that's one area where we are focused on.
And what kind of capacity are you looking at on the renewable energy side? Also the kind of investments that you're looking at?
Well, we have a stated goal of 20 gigawatt of renewable energy by 2030, but we are going to bring it up by a couple of years and maybe more. We are doing it much faster than what we had slated for.
So there's a lot on the plate at this point in time. What do you prioritize?
Exciting times.
What do you prioritize in 2025? We haven't even spoken about paints.
No, so yeah, I mean, a lot's happening, and steel, energy, auto, cement, paint. So yeah, everything is on are expanding, and yeah. So it's
What's the expectation from the finance minister in the budget?
I have not really thought about it, because now it's not very.
It doesn't really.
So the key thing, in my view, is that government must spend on infrastructure development. They must spend whatever they planned. They must spend that, and that's very important for the economy. Because if we spend on the infrastructure, the tertiary benefits are much larger.
Yeah. So since you're asking the government to spend on infrastructure, the government is also asking industry to do private capex. What would the number at the group level be for 25?
I have said that over the next 6 years, we will spend $70 billion.
Yeah.
And it might be even more than that, but that's the plan which we have already drawn, that over the next 6 years, we'll spend $70 billion.
$70 billion. Do you go back from Davos confident about 2025 on the back of all conversations that you've had,
Absolutely.
but also on the strength of the businesses that you're in?
Absolutely. I mean, Davos, India is represented very strongly, and there are business houses. Everybody is represented here, and yeah, India is the talk of the town, as they say in Davos.
Trump and then
India.
and AI.
Yeah, and AI, yes.
As well.
Yes,
is that a space that you...
Not yet. No, not yet. I don't understand AI much, but yeah.
Yeah, I thought as long as you're doing paint, cement, electric mobility, maybe you want to look at AI.
That's already too much on my plate, so yeah.
Well, thank you very, very much. Let me end by asking you for the headline for 25.
Oh. 25 would be economically a good year for the world, in my opinion, and India would be very strong.
Mr. Jindal, always a pleasure. Many thanks for joining us here in Davos on CNBC-TV18. Appreciate your time, and we wish you the very best of luck. Sajjan Jindal there talking to us in Davos. Well, the big headline coming in, a Make in India JSW branded electric car out on the roads in the next 18 months. That's the hope, that's the target that they're working with, in an IPO for the cements business as well, and a capex number of 70 billion over the next 6 years that they are committed to. We will, of course, take a break here, but there's a lot more that will continue. You're watching CNBC-TV18. It's 20 years of us covering Davos. We're back in a moment with more.